I ended up studying every single candlestick Bible, every single course, every single indicator, all the Elliott waves, Waqar, smart money concepts, market structure, but still I didn't have the results that I was looking for. What's easier for a trader, for a beginner, to get a chunk, just a little portion of a market that moves $5.3 trillion a day, or moving billions in weeks, which is crypto? Everybody wants to be a full-time trader, everybody wants to be entrepreneur and be their own boss. Maybe it hurts to hear this, but some people, they need a boss. Of course, you can have the freedom of not having to follow the instructions of a higher level telling you what to do, but that only helps when you are disciplined enough to think, okay, I have the freedom, I can do whatever I want, still I decide to do what it needs to be done. Some of the profitable traders that were making hundreds of thousands of dollars every single month, I realized that I knew more than them. Actually, if we got into a technical exam, I'll probably get a higher grade than them, but I was broke, I was not profitable, and they were making $100,000 every single month.
That point you reached was a point I reached, and a point many will reach or have reached. So that journey, that bridge to go from a textbook and knowing it all to actually making profit, which is what counts. What is that bridge? What is that journey? Ladies and gentlemen, welcome back to another episode. I'm joined by, David in English, David in Spanish. You got an interesting story, and obviously the show is traders and entrepreneurs. So I love it when I get a guest like yourself, which is a trader and an entrepreneur, and has done big things in both sides. So your story is a unique one, and especially because of your age and the things you have achieved at a young age. I think a lot of people watching aspire to find success, wealth, build businesses, become traders, and do it all young. And from what I just see from your Instagram and following you for a few years, young guy, I think at the age of 18, you mentioned you had your first supercar. By the age of 20, moving to Dubai, company worth $20 million, first Ferrari. So you've done a lot. I see the watch as well, beautiful Patek. You've achieved a lot, my man, and it's very cool to see. And dominating in the Spanish-speaking markets. Myself, I was living in Spain at the time, so I was watching the whole show, and it was an incredible journey. So I just want to get a brief backstory, so people can get up to date with who you are, what you've done, and then we can jump right into the trading topics.
It's been a journey, and I'm very happy to be here. I'm a huge supporter of the show, so very happy to be here. Since I was 17 is when I started in this trading sector. At first, like everybody else, I was trying to educate myself as much. I understood that the education is the base, is the foundation of a proper and a successful future. So I literally jumped directly into books, into private courses. I had the chance to learn directly from traders that have worked in Wall Street, professional investors, certified ones, and then I applied it. Once I started trading, I applied for a company based in Tenerife for being basically a trader for them. And that time, the PropFem solutions were not as famous. Actually, most of them, they didn't even exist back then.
What year is this?
I'm talking about 2019.
Okay.
Some of them they were
just FTMO, but it was still not a big thing.
What we were doing is that we started a venture in the crypto sector, and I was one of the shareholders, and I was one of the traders. So all the profit that we were making in that company, some of them were allocated to my trading funds. My first real account managing this fund was 25k euro. That was the entry level, and then I escalated and made myself up to 7 figures.
Wow. And I vaguely remember this was a trading company, but it was a crypto. It was all in the crypto space. But you yourself are a forex trader.
Yeah.
So these early years, you were doing forex.
Actually, I was doing forex, but they wanted me to do crypto. So I had to shift and learn how to trade, not based on lots, but trade based on volume, for example. Once you are trading in exchanges, there's no lots. You just have to enter on the pairs volume. So I had to modify a little bit my strategy, but they wanted me to do crypto. So for those years, I did crypto. But my whole background is mainly on forex.
Okay, this is not where I wanted to take the conversation, but it comes nicely. You're a forex trader by skill, by education, by everything you've studied and tested. It's in the forex space. And I imagine at the time, the years that you've mentioned was when the bull runs were just starting and happening.
Correct.
Probably why they wanted you to focus on that. And now, obviously, at the time of filming, we're seeing a similar situation where the crypto markets are picking up. How easy is it to convert forex technical analysis and technical knowledge into the crypto markets and do it in a profitable way?
That's a very good question, because those are two completely different markets in terms of liquidity. They are complete opposite. The main challenge that I had was to try to get enough data in order to backtest my strategies, because crypto only has about 10 years of historical data compared to forex that has 50 or 100 years if you find good sources. So the main issue that I had was trying how to get a solid backtesting on pairs that didn't have that much historical data, and secondly, the market volatility. Of course, forex has a lot more liquidity, $5.3 trillion a day movement on forex, but that doesn't mean that moves more than crypto. It's the complete opposite. In crypto, you can have 20%, 30% movements in one single day. So I had the problems also that maybe a backtested strategy, it was all wiped out by a huge manipulation movement in crypto. First of all, not having enough data, and second of all, knowing that at any single time I can have huge manipulation movements that I was not considering.
Were you trading, day trading in crypto? Was it more buy and sell and holding the physical, well, not the physical, but the currency? Yes.
No, I was mainly futures, and that was also quite an.
So it's with leverage as well, actually.
Yeah, with the leverage.
Okay.
Yeah.
So in that case, with the things you've said of it's more volatile, and volatility is a good and bad thing.
Yeah.
But maybe not the 5.3 trillion, but as a percentage, it does move a lot, and we've all seen it. When you are in that environment and there's less data and there's more volatility, more manipulations, and then you have forex, which is very liquid, very more sensible to trade, let's say more understood and traditional.
Yeah.
Why were the investors so open to saying, hey, crypto is the time now, shift your skill over to here?
Yeah.
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow.
Until today, they are very huge supporters of crypto.
Okay.
They are this kind of people that they are
Futurists,
blockchain, futuristic, visionaries, let's say. So I think they didn't care about that much of these challenges that I was proposing to them, but more like to be in the crypto sector, which actually, if it weren't by them, we wouldn't make as much profit as we did in 2022, because that was mainly focused on the crypto sector, while the forex was just another year. So they wanted to be crypto guys completely, and forex it was like a secondary market.
Was it all day trading, or was there a portion you were managing as a portfolio to hold on spot?
No, mainly it was just day trading.
Okay, and you were part of a bigger portfolio within the crypto?
I was responsible for the trading department, because as the spot part, they were doing it, but with another investor, an investor that was managing and analyzing these DeFi opportunities or new tokens or ICOs and.
Yeah, so my knowledge in crypto isn't the best, but we've all been down the rabbit hole, and the things I see is so vast, from gaming crypto to meme coins to everything else in between. And what I usually find is when it's on a personal level, the people I see on Twitter and they're probably trading less than 50,000 euros is probably the level. And they usually put some money into the majors, so it's Bitcoin, Ethereum, and so forth. Then they have a nice allocation in the altcoins, and they hope that Bitcoin goes, these follow. Yeah. And then they always have a portion for meme coins and random stuff. And if divided appropriately, it kind of makes sense. And when you catch the bull run, everything goes up, so everything is nice and great. But because you were day trading it and doing in the futures with leverage, whether it's a bull market or bear market, it doesn't matter too much. You're just buying or selling accordingly. So what experiences did you have when you were in the bull markets to day trade it, and then when it started to reverse and become a bear? You went through the full cycle. So how was the day trading going through the market cycle within crypto?
Yeah, the markets that I was trading was mainly BTC, USD, USDT, and Ethereum. Those are the two main pairs that I was trading. I was not trading altcoins or any other, because even BTC and Ethereum, compared to forex, they are low capitalization markets. If you go to altcoins, then it's even lower, so it's easier to manipulate. so harder to trade based on data. So
Makes sense.
what was my feelings in this bull market? What I realized is that they are very trend guided markets. It means when a new trend is formed, it's very hard to change the structure and do the opposite after. Means that 90% of my strategies were managed in a way that I was trading following the trend. And it was very important to do that. Maybe in forex, based on the much more capitalization and volatility, you can try to enter in counter trade trades for break of structures. But in crypto, at least from my experience, it didn't work like that. If there's an uptrend, you just have to follow the trend, which most of the times in forex, you have to think like that. But I had at that time some different strategies that sometimes gave me entries on opposite trend situations. I didn't took those in crypto. And the crypto market is purely or mostly based by FOMO and food. There's no in between. It's either a huge uptrend or downtrend.
Yeah.
Now, this past year, we've seen some consolidations, but if you see the whole historical data, there's not so many periods of long consolidations. It's just so. But I didn't like it, to be honest. I was trading crypto because I had to, but I had this conflict in my mind because I was not a huge supporter in crypto internally, because I'm a huge supporter of regulation, but we can really talk about if decentralization in and of itself, can it be possible? Because there's always people that wants to have the power. So this idea of giving the power to the people and nobody has the control, but everybody.
As in, you believe it can be corrupted?
It can be corrupted. And
How so? If it's decentralized and everybody can see on the blockchain every movement, every order.
What I see is that until it comes to regulation, it's just a playground for hedge funds, and it's a playground for whales. Being in the market for a few years now, almost 6 years now, until a regulation comes, the big money, the big capital is not going to enter the market, meaning the big hedge funds are just maybe putting a foot in it, but they are not heavily invested. They are trying now creating the ETFs of Bitcoin and ETFs of Ethereum, trying to regulate it. I think that's the only way to go. But again, that's a bit hypocrite, because the main point of crypto was not to get regulated and to be decentralized. So that's one, for me, it conflicts. The purists of crypto didn't want to get regulated. But for me, in order to really grow as a market, they need hedge fund money and they need the big boys to come in. And in order for them to come, without regulation, it's just a playground to pumps and dumps. And
do you think on this debate, I'm speaking from the perspective of the crypto purists who don't want decentralized, and I'd imagine they would say something like, if we get mass adoption in the public, the money that would eventually flow into the markets should be enough to make it a mature major market without regulation. Would you speculate that the public's money is not enough and you need the big funds and the big players to really make it a mature market?
We've seen some examples like GameStop. Of course, retail traders, they can make a difference, but not long-lasting. We cannot compete with them. They have trillions of dollars. They are the ones creating the power. They are creating the capital. So they want to control it. It's always been like this, and we're not going to change it. So I understand that these purists, they want to change the game. For me, my perspective is I don't want to change the game. I want to play the game as better and as best as possible to get my portion out of that. And I realized that what's easier for a trader, for a beginner, to get a huge portion or just a chunk, just a little portion of a market that moves $5.3 trillion a day, or moving billions in weeks, which is crypto. So that's why I decided to step into the forex. But
so you transitioned back over time.
Yes.
So how long were you trading this 7 million portfolio in crypto before you decided to step into?
From 2019 I joined, 2020 until 2022, because we grew.
So a few years you were in the crypto space.
Yeah.
Okay.
And again, I was one of the main shareholders and one of the main and the youngest executive in the company. So I had to deal with a lot of exchanges, a lot of regulatory bodies, a lot of crypto companies. So of course, I'm very knowledgeable, and I have a huge base on that, even though it was not the main thing that I wanted. In 2022, we grew that company a lot. We generated $20 million in one single year. we got evaluated by Nexia, which is one of the top consultants. Our company got evaluated for 57 million euros and with a single year revenue of more than 20 million euros. And this was when I was 20 years old. This holded a huge responsibility on my side. I had around 200 employees at that time, only being 20, 21 years old. So I had to step back a little bit into trading manually myself because I had to manage all these people and manage this company with my other 3 partners. So that's when I was managing this fund until 2022 because we grew a lot and I had to not only do trading but also manage different departments, getting legal, getting marketing, in sales, and it was very stressful. And you know that the more stressful situation that you can trading, the worse. And that was not the best scenario for me to be trading.
Makes sense. You know, you've reached at a young age an interesting point that I think a lot of people want to get to, but most haven't experienced, which is everybody's so focused on becoming a trader. And that journey is a long one, can take years and years. And then through prop firms, acquiring capital, then personal capital, and then scaling that, becoming full-time. You could take half a decade to a decade in just becoming a trader. And then being a profitable trader, doing it for a few years, eventually then it crosses people's mind, okay, let me get into business, cash flow business, manage a team and grow something, grow an empire. You seem to have done it all in a very short space of time, relatively speaking, and at a young age. So you're in a unique position where you can also talk from a macro and give a bird's eye view on what is that process like and whether that goal, that dream that a lot of young people hold, what the reality behind the curtain is it as amazing as people seem to be this trader and do it full time and manage capital? Is that as desirable as people may think? Because I know that's a big goal and it's not a goal for me anymore, but it was when I was younger. Then it's okay, being a full-time trader, and then as you mentioned, growing a company, the stress that comes with that, but then you get to grow something tangible and have a bigger impact. Where does your desires and fulfillment and growth and enjoyment come from all of these things?
Yeah, everybody wants to be a full-time trader. Everybody wants to be entrepreneur and be their own boss. But you have to keep in mind that it's not only to be their own boss. It's only being your own secretary, being your own accountable, being your own legal person, being your own everything. So maybe it hurts to hear this, but some people, they need a boss. They cannot be their own boss. Why? Because of course you can have the freedom of not having to follow the instructions of a higher level telling you what to do. That only helps when you are disciplined enough to think, okay, I have the freedom, I can do whatever I want, still I decide to do what it needs to be done. So it's not an easy journey. It's a big self-recognition, internally. You have to recognize yourself and really evaluate and say, okay, am I really ready to not have a safety net behind me, not have anybody that says what I need to do and still perform at the same level? If the answer is no, then you need a job. You need a boss, and it's completely right. It's not an easy journey. Long story short, it's completely not an easy journey. I think that everybody that could watch social media of a person like me or like you, everybody will say will quickly change lives, but I will highly recommend people not to change lives with me, because it is a never-ending solving problems situation. Some of the people that may have listened, that you are listening, maybe you are like me and you really want to pass through this hard journey because it's gonna make your character and it's gonna really forge you as a man and as an entrepreneur. But those who just want the freedom and the social media status and the money, being young, they're completely off.
You know, on the show, I've had people that have reached wealth, and I've heard it online too, that the wealthier you get, the more desirable it becomes on social media. And as you mentioned, people will want to have your life from what they see online, but behind the scenes, you would say you wouldn't recommend the swap. But I'm sure there's a point where things were getting better and you were getting happier and happier, and then it got more stressful, even though the money went up the whole way. What is that sweet point where you have the freedom without the stress that you later on incur as you get more and more into the entrepreneur and trading space?
The younger you are, of course, the better. That doesn't mean that if you are older than me and older than Waqar, you cannot compare it to other people to frustrate yourself. You have to compare it only to motivate yourself. But let's say from the 20s and 30s, from 20 to 30, those are the building years, or 25, 35, those are the building years. So I will not evaluate my life based on happiness or how happy I am, or the less stressful that I'm, the better. So I will not say it's a bad thing. I will say in those years, try to grow as much as possible, to have a life that every day you have to solve a new problem, and every day you have to overcome all the problems because if you have an easy life, then what's the point of living? I truly believe that people value too much happiness. I value more productivity. I value more goals, discipline, values, not as much as happiness, because happiness, being happy is just so, it's a fugazi. You can be happy one day, next day you are, and those are moments. But you cannot measure happiness in and of itself. But you can measure goals, you can measure discipline, you can measure habits. So I'll say to all the people in their 20s right now, focus on what you can control, focus on your habits. Don't really care about if what you're doing, it's making you happy right now.
This comment that you've just mentioned, I've heard it my whole life of like, but it's always been when I was less, and I'm hearing people that are above me, and they're always like, you know,
what makes you
go
happy.
for fulfillment, go for purpose, go for growing something. And I always used to think when I was younger, I was like, it must be so easy to say that. It must be so nice to say that. But then you're running around in your Ferrari and doing this and that. And now that I've reached a higher stage than I was, for me, I truly get it. And I wish I could like share that feeling properly with the audience that maybe don't understand it of when you bought that watch, when I bought this watch, okay, it's a happy moment. But when you go to sleep and wake up the next day and you look at it, it's already a little bit less. And then 1 month later, you forget and you don't care about it. But when I look at something that I'm building, for example, this podcast, just seeing the views, seeing the growth, seeing the guests that I'm getting, all of this, that's so sick.
But
so much more sick that it doesn't feel like work, and that's passionate, enjoyable. And I can see exactly what you're trying to say of when you grow, you want to grow something real and have progress. And
to feel proud. I think the main difference is to feel proud and to feel happy. Also, when you smoke weed, you are happy in that moment. Are you proud? No. When I bought this watch, when you bought that one, you were proud. When you built the show, we were proud. And proud is based on discipline, habits, and solid achievements. Happy in and of itself, you can be happy getting drugs. You can be happy doing the wrong things in your life. And also, I don't understand why people want a happy journey. I don't understand. Every single success story has a lot of pain behind it. And if you want to grow your body, of course it's going to hurt. It's like thinking that you're going to go to the gym and you're going to get the muscle without getting the pain that comes with it. So, but when you somehow extrapolate that into the entrepreneurship lives, people doesn't understand it. They understand that, of course, you're going to have sore muscles, you're going to get tired after gym, and that's part of the journey. But once in the entrepreneurship journey, they face their own their first adversity, it's a bad thing that they're doing. And of course not. It's just part of the journey.
What you're saying, I've heard someone speak on, and I like it because everybody wants the traits. Everybody wants to be wealthy. Everybody wants to be patient and have all of these traits. But what is on the opposite side of achieving that is you have to go through the hard moments to become patient. So it's always through the pain in the gym to get the results. One thing that you mentioned was being an entrepreneur, you had to master so many things. Being your own legal, your own accountant, your own motivator, your own boss. There's so many skills you have to learn to body a leader and to body an entrepreneur. So you're like a Swiss Army knife. You have to be good at everything. I think trading could be similar because you have to master so many fields, from technical analysis to your mind, to your psychology, to account management, and over time, discipline, consistency, showing up, all of these things. What for you was the harder thing to conquer between everything it takes to be a leader of 200 employees and an entrepreneur, or being a master of your own mind and managing a portfolio of millions of dollars? As a trader, it's very simple. You have to find an edge, and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your backtesting tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come.
Yeah, everything's hard, man. You just have to choose what is your hardness. Being broke is hard. Being rich is hard. Being fat is hard. Being fit is hard. You just have to. Everything is hard. Being single is hard, being married is hard, being a trader, being a businessman is all hard. Why I changed in that specific time frame to managing a business and running a company over trading myself is because I saw an opportunity that I had to take. There was a lot of money getting into the market. We had huge contracts of other companies in agreements with us that otherwise maybe just trading in that single 1 year or 2 year I couldn't make not that much money, to be honest, but I could still be a trader when I'm 40. So in regards to your question, what were the most difficult parts of forging my trading character? It was to fight against these universal rules that we've been taught since we are child. For example, the more that you study, the better. The more master's degree that you have, the better. But in trading, the more that you know, it's not better. And I had this conflict in my mind because every time I was being told, the more you study, the best results you're gonna get. So I ended up studying every single candlestick Bible, every single course, every single indicator. This was funny because you were mentioning in the podcast yesterday, I went through the exact same journey of studying all the Elliott waves, Waqar, smart money concepts, market structure, but still I didn't have the results that I was looking for. And I was comparing to myself to some of the profitable traders that were making hundreds of thousands of dollars every single month, and they were sharing their MyFX book accounts, and they were sharing their live trading details every single month. And I realized that I knew more than them. Actually, if we got into a
Like an
technical exam,
Yeah.
I'll probably get a higher grade than them. But I was broke, I was not profitable, and they were making $100,000 every single month. So that's when there was a click and there was a switch in my mind when I switched from educating myself to execute and to really put in practice what I've learned. So this is just an example of all these universal rules and all these things that we've been told since we are a child that we need to change when we are traders, for example. Another thing, work as a team. We always get told this, that with people everything's better. I don't think so. In trading, it's a very lonely journey. If you are with your friends, and I was with my friends trading the same pair in the same room, and I was watching one thing, I was seeing one thing on the screen based on my strategy. He was, of course, watching another thing, and then I changed my strategy based on his opinion, and then mine was properly. I mean, what happened was what I was thinking about to happen. So then I had to quit myself from all my circle and just be like get into a type of monk mode and be, of course, focus on my career and on my trading. So these are two examples, but I wouldn't say the hardest part for me was managing risk or managing this specific technical strategy. It was not a technicism problem. It was more a conceptualization of what been taught compared to what needs to be done in trading.
We spoke about this at length yesterday from my side because I was the guest, but now it's your turn. You're the guest on Titans of Tomorrow. That point you reached was a point I reached, and a point many will reach or have reached, which is you're like a textbook. You know all of the theory, and it's very normal to learn all of the theory because you try this thing, you don't become profitable. So it's like, okay, I need to learn this, and then this, and then this. And then you run around the whole internet looking for all of the information, and you learn it all, and you understand it all, but you just can't make any money.
Yeah.
And then you have to break past something to then become profitable. And as you said, the guys that are making the money, they maybe know less in terms of concepts and theory. So that journey, that bridge to go from a textbook and knowing it all to actually making profit, which is what counts. What is that bridge? What is that journey?
There's an important decision that you need to make, and you have to be very knowledgeable and put your ego apart. Because again, you have to accept that people with less knowledge than you are making more money than you. And actually, the funny thing was that most of their strategies were very simple strategies. Now, there's a lot of trendy strategies with this liquidity, smart money concept, a lot of fancy terms. But most of the traders that I was watching at that time, and most of the traders that I was learning from, they were trading in the stock market, in the real stock market, and basically their strategies consist of an opening with a certain volume. If this certain volume is met, they create a maximum zone. If that maximum zone is broken with volume, they enter ratio 1.2, and that's it, more or less. But very simple thing that a strategy will 1 year old could understand in just a few minutes. It was hard because I spent like 2 years every single day studying all these candlesticks patterns, all these doji formations, all these crazy indicators, Hichimoku, Fibonacci, all this kind of stuff that I ended up wiping all that up and starting using the first things that I learned, which were market structure, liquidity, volume, and basic things. So it was sometimes it's even harder to relearn than to learn from scratch, because you had to
the bad habits.
Exactly. You build bad habits and you have to remove them.
You've had a cool journey from different markets to different strategies, and your own money, prop firms, real capital, investor capital. You navigated a lot. Now, 2024, what is the blueprint? What are you doing now?
So you mentioned prop firms. I didn't have the chance to use any prop firm. As we said, maybe FTMO was at that time, but I didn't know that FTMO even existed. I met my current partner right now, he's Alex. My journey was kind of unique because the main factor that made me managing 7 figures, it was because we've built a company that was generating millions, so I could get allocated huge portions of capital. If that won't be the case, I don't know if what I say is that I try to replicate my story today. I'm not sure if I will make it again the same way that I did it.
Okay.
And then I met my partner in Orion in the prop firm. He achieved almost the same results as me, but using prop firms. And then I realized, what is this prop firm model? Managing all these firms, company capitals. And in a single year, he was managing $2.5 million. Yeah, since
in prop firms.
In prop firms, having zero knowledge to being managed in just 1 year. So that was a wake-up call. I wanted to really get into the prop firm industry. And then I realized that the prop firm industry is mostly so corrupted because they sell an idea that is not the right one. And it's interesting though, because I find that if a prop firm does the things well, you can generate not millions but billions of dollars. Why? Because you have a huge amount of data that you are perceiving from your traders, and the correct utilization of this data can make you billions. How? Most of these prop firms are relying just on failed challenges fees, trading completely on a completely demo simulated environment, which is fine at some point, because if you bring enough people in and with that cash flow, you can pay the traders out. If you can maintain that structure, it could be somehow understandable. What's the problem? That the more time that it passes, the more traders that you're gonna have funded. And I'm saying funded because they are not real funded. They just said their account said funded, and you have to pay them out. And if your marketing efforts, if you're not bringing enough people in, there's an imbalance, and you just have to go bankrupt. That's what happened with all these prop firms for the past few years. But I noticed one thing. When I was reading the terms and conditions of all these prop firms, I did a huge study of FTMO and the main ones at the moment. I realized that there was some point in the terms and conditions that said you specifically consent for the prop firm to use your data and share it to third parties and utilize your data, and you are not entitled to any single profit that it's made by using your data. Then I say, why they put this? If they are not trading with your data, if they are just relying on failed challenges, they wouldn't put this in the terms and conditions. The biggest companies, not only in trading or prop firm industry, but the biggest companies, their most valuable asset is data. It's not stock. Why Facebook or Meta is so big? Because of the data that they have. Why Tesla is so big? It's because of the cars? No, they were not even profitable selling cars until some point. It's because, for example, Tesla, they are building this laser system that is recognizing all the roads to get the autonomous driving. And when autonomous driving becomes a thing, all the other big car companies who are gonna be buying the data from another company, no, from Tesla, that already have the data of all the roads in the world. So with the prop firm industry, I realized that I could get all the data from the traders, not their personal data. I'm not talking about their names or addresses. I'm talking about specifically trading data in the market. There's people that they are losing money, and what are the A-book traders, what are the profitable traders, what they are doing that makes them be consistent and profitable traders. And using that data, I can capitalize and have my hedge fund and create algo strategies behind it to get a strategy that is based by the statistics of the market, based by the 80-90% of the people that fails. So right now, all my trading is based on my firm's capital strategy. I'm not trading manually. I'm just trading based on the data that I'm getting from the tradings that are trading in my firm.
You mentioned off camera earlier that a lot of the big firms are starting to use the data, and I hear it a lot in their marketing posts and stuff that real funds or we're going to generate revenue outside of just failed challenges. But I'm interested to know, what is the reality behind the scenes? Do you think they're actually making the profit that they claim from A-booking maybe, or selling the data to brokerages? I'm not sure exactly what they're doing. And if they are, the ones that are successfully doing it, out of their total revenue, how much is really coming from not failed challenge fees, from these other revenue sources of the data?
Right now, I'd say 10% of the revenue. Right now is not a main thing on most of the cases, which again, as one of the things that I realized that they are doing completely wrong, because they are just focusing on the short-term solution, which is getting the failed challenges fees, but they are leaving in the table millions and millions of historical data that you said maybe you can sell that data to brokers or to other financial entities. That's right, but if you can utilize them, it's a better option, at least in my head. So I see that all these prop firms are leaving all this data in the table, and they are not capitalizing on them. What happens behind the scenes to people to understand? Because as you said, most of them, they say trade real funds, trade real money, trade our capital. 90% of the cases is completely wrong. That's, for example, the case with my forex funds. They had a few different problems that stopped them. First of all, for example, and of course, was the jurisdiction that they were incorporated in. It was US and Canada. So the FCA and the CFTC, they are very strong regulatory bodies that in other part of the world that could have been prevented. Why they went against my forex funds and not against FTMO? Was it because only the trading practices that they were doing? Probably, but I would say mainly because it was incorporated in a jurisdiction that when something is not regulated, you just get shut down. That was the first thing. Second thing was because they were modifying the trading conditions of the traders to make them lose, modifying the spreads, the commissions, and trying to get an environment which was not the same as the real one. Third, out of the 24,000 traders that they were funded traders of the past traders, they only took them into the A-book and took them into real funds, only 100 of them. Out of 24,000, only 100 of them were trading real funds. And lastly, they were doing a bad publicity, and they were basically tricking people, because in their website and all the copywriting was trade real funds, trade real money, and they only put 100 out of 24,000. So that's why they got shut down. So what happens behind the scenes when you pass a funded challenge? First of all entirely, completely, all the challenges are in demo, just in case, because maybe there are some people that they think that just because you pay 500 euro, you get access to 100,000 euros. That's completely not the case. So first of all, it's a completely environment. But if you pass the challenge, this could go through two ways. What I do in my company is that I have a specific risk team department that analyzes how the trader passed the challenge, because it's not the same a trader that passes in one trade, which is possible if you trade open trades in 4 different days and you just get a huge win in one day. Technically, you pass the challenge. It's not the same as other person that trades regularly, consistently, with regular lot size, volume, and blah 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 blah. I analyze the duration of the account. I manage the amount of trades taken. I measure the volume used. I mention the ratio between the lots used, because it's not the same that you are using for a consistency rule. It's not the same that you are using 5 lots, 5 lots, 5 lots, and then you all of a sudden you put 50 lots, which I understand that it depends on the strategy. Of course, you have to modify your lot size depending on how big your stop loss is, but in a normal, obvious range, not in a huge. Again, so basically, long story short, they pass an external, an extra layer of security, and only the ones that are consistent and showing consistent results are the ones moved to the A book, and therefore managing, let's say, real funds. This doesn't mean that the other ones, which are not backed by real funds, are not going to get paid, because as said, the promise in the prop firm is if you get funded, you get paid. So of course you're going to get paid. But what happened behind is not the same for one trader to another.
So why are you even in your firm, if it's not the most common thing, even the big firms are not doing it too well, or even if they are doing it, it's not a major portion of their revenue, why are you going to these lengths where you're hiring a team, external risk management, this extra level of headache? What is the win for you? Why are you desiring to do that?
Because I see the future of it. I'm not just looking right now and looking and saying what can I generate right now. I'm looking at the future, and I think FTMO is one of these terms and conditions that I mentioned before was based on the FTMO terms and conditions. So I don't know internally. I don't know the company from inside. I don't know how they operate, but I will put my hand on fire that they are making right now at this stage, FTMO making more money with the data, utilize data, than on the past challenges. So again, let's put an example.
Why do you believe that? So what are they doing exactly to make? Because they're making a lot of money.
Yeah, they are. But imagine that you are making, let's say, 10 millions a month. Okay, 10 millions a month only on cash flow of people just paying, and you based on what you pay, what you get in, what you pay out, you get a balance of 10 million a month. But if you are not doing A-book and real trading, you're just paying based on the whatever amount you are perceiving as a challenge fees. But I try to have a bigger picture vision and say, okay, that means that if I'm generating that much income based on failed challenges, means that 90% of the people are losing money, or losing the challenge. It's not money because it's demo, but they are losing the challenge. Therefore, I can create a strategy using their data, replicating the ones that are losing and the ones that are winning, mirroring the ones that are winning, and get a more or less 80-90% win ratio strategy.
As in reverse trading the losers.
As reverse trading the losers, mirror trading the profitable ones. And if I manage to do and to have an 80%, 90% profit ratio strategy based not on my perception of the market, not based on my Fibonacci, but based on real traders. I mean, the market itself is not, because you can have an 80% win rate in your strategy just drawing things in the chart, but this is not the case. You have an 80% accuracy based on the thousands and thousands of traders. It's a very solid one. So that's $1 billion problem that I'm trying to solve. If I manage to really solve this problem with my own funds, or with I'm on to hedge fund, you know the power that you could have having an algo strategy that manages 80-90% solid profit. You could get hundreds of millions, if not billions of dollars to put into that fund and generate how much? 30, 40, 50, 60, 70% a year. So that's my goal with the prop firm, not just generate with the cash flow that is entering.
I spoke to a few founders of prop firms. One of them, ACG, Alpha Capital, they have also a regulated broker. And one of their partners is very, very experienced in London in the markets within this field, brokerages and so forth. And taking their contacts and exposure in the brokerage space, now having a prop firm, they've been trying to sell the data. We have all of this data of reverse trading, profitable traders, and so forth. And they said they had difficulty acquiring a buyer that is interested in the data enough. And it's not because people buy brokerage data all the time, and people use the brokerage data all the time. So I thought it was an easy thing, just sell the data because people are buying it anyway. He was like, with the prop firms, it's a little bit difficult because of the reset button. Whereas in a brokerage, it's somebody's real money. Even if it's $1,000, for that person, it's their money. It's personal. Whereas nobody feels personal about a prop firm because there's a reset button, buy another challenge. Second of all, he said there's a big issue, which is you can't stop a trader just waking up and changing his mind. Whereas if I'm trading a personal $10,000, I'm not going to wake up and just max leverage just because I feel like it. But in a prop firm, that temptation is always there. And they said they saw so many people who sensibly trade phase one with risk management, consistent growth, many trades, phase two the same. Then they're funded. They traded good for a couple of days. They wake up, max daily drawdown gone, and they could have just been patient.
Yeah.
And they said because of that element, nobody's interested in the data. What is your thoughts on this? Because I'm sure you've experienced the same.
Yeah. I'm not interested in selling the data. I'm interested in utilizing the data. My challenge is not to get the most amount of money of selling my data. It's to build a strategy that consistently, even with these variables and with these traders that they are going all in and fooling their margin out, how can I build a long-lasting, sustainable model that can generate me a 60% a year, which is a crazy return, and then to bring in hundreds of millions of dollars into my fund. So, of course, we cannot compare the volume, the quality of the data, compare from a broker to a prop firm because of the same reason that we cannot compare Bitcoin to forex, because one of them is just too new and the quality of the data is not the same. What I'm telling is that I'm not watching the industry as of now. I'm watching the industry as what's going to happen in the future. And I'm seeing a clear shifting path where traders, they don't want to be no longer wanting to deposit into their brokers. They want to get a prop firm account, most of them. So I understand this perspective from the brokers, but also the brokers are the ones that needs to be adapting right now, because the asset management industry or proprietary trading industry, whether if it's a real one or a simulated one, this modern one, it's what what traders really need right now. And if they don't adapt, they are going to fail. So it's completely understandable that right now maybe the data is not the same one as a broker that has 30 years of millions of capital, of real traders with real money capital. But I know for a fact that in the next 10, 15 years, this is going to change, and 90% of the trading allocation is going to be moved to prop firms, and the traders no longer will need their own capital, just the skill, because this capital is going to be provided by third-party companies.
So how about right now? Obviously, the billion-dollar problem you're trying to solve, I'm sure there's a lot of complexity of AI, team, risk, the professionals that understand mathematics and all these things. I don't know. But what about right now, where anybody could just imagine, in the phase one, phase two, the evaluation portion, we know majority of people lose. I don't know the exact data, but I think like 90% or something. What if you would, including the spread, including the commissions and everything, if you were to just take that raw sample data of all of the people in your fund who are taking the valuation, not the funded, only the evaluation portion, and directly reverse traded it in exactly the same way, would that alone be profitable, or is there other things that come into it?
There's a thing called the big number rule. And it's not the same that you test on 10 traders or that you test on 1 million traders. Because if you test 1 million traders, 90% of them, they are going to fail. And you
average out the anomalies on a larger...
After the larger the portion of the data, the more accurate data that you have. So will this be enough? Mostly yes, but depends. If you have 100 traders, maybe 40 of them they pass. You can't know, because this is just small portion. But if you conduct the same test with 1 million traders and you do it with this million, you do 1 million here, 1 million there, 1 million there, all three tests are going to have an 89.7 and a 90.2 and around the same. So will this alone will be enough? If you have enough data, yes.
What are the dangers that I'm not considering? So, for example, from a win rates perspective, if we know 90% of phase one traders lose, that means if we reverse trade it, we'll have a 90% win rate.
Yeah.
However, then there's risk to reward, then there's trade frequency, there's all these other things. Yeah. What metrics in there are not useful or problematic?
Yeah, the problems comes there's a few problems that you can encounter. First of all, they are trading in a simulated environment and you are trading in a real life environment. So the conditions in and of itself, you can try to replicate them in the demo environment, but they are not going to be the same. Even if you put the same
Meaning
spread,
price feed or
price feed in
Okay.
terms of the execution time, it's not the same when you are executing a 1 million, 2 million, 3 million euro position. Even if it's a large market, it takes a little bit more than on a demo. Demo is just numbers in the screen, but it doesn't feel any portion of it. Doesn't feel anything. That's the first challenge. How can you manage the differences between the simulated market that you are getting the data from and trying to replicate them in real market with real capital, with real execution, and with the liquidity provider problems that you could face in real time? Second of all is the delay that you could have in these inputs, because again, this is an automated strategy. So a millisecond could be a huge difference. Depends on the volatility. Maybe if he lost the account in 1 second, but you had a 2-second delay or a millisecond delay, that could be the difference between reaching the stop loss or take profit and you're not. So also this delay and transferring the data at a high speed is one of the main problems as well. And the third problem is the main risk of managing real funds on a prop firms is what you said before. How do you manage risk with these traders? You cannot have A+ setups or B+ setups. I mean, you can have A+ traders or B+ traders, but still an A+ trader one day can just wake up and say, I'm going to go full margin. Why? Because I have some profits in the table and I like to go all in. If I lose, I'll just take my profits, reset and that. So those anomalies, let's say, and those never-ending adjusting variables that you are getting, those will be a constant problem of yours. So those will be the three main challenging phases that I'm going through and that I'm trying to solve.
Fair enough. David, it's been a very good conversation. I wish we could go a bit longer, but we've just run out of time. But it was very good to see an insight from a trader who's done what many aspire to do, and then now from the bird's eye view in the prop firm, managing traders and so forth. A very cool journey. So wishing you well, and I'm sure very soon you're in Dubai. We're both in the same city, so I'm sure we'll do a part 2 and a lot more to come. But bro, thank you very much for your time.
Thank you for having me, and I hope that people had a great time and really get to know what's happening behind the curtains, because I see a lot of CEOs, most of the prop firms, their corporate team, they are not even in the face of the camera because they are performing some really wrong actions behind. So it's very hard to find a person or a corporate team that puts their reputation and their image with the brand. So as long as people have found value and understood a thing that didn't know when they first click on this episode, I'm happy, and I'll be always here to share the value that I know.
Brilliant. David, thank you very much.